I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast, and it's a different podcast format than everything else out there. I bring together a new and experienced investor on the episodes and let the aspiring investor ask the questions that they need answered to push their business along to the next level. And if you're an aspiring apartment investor yourself, you probably have the same questions. So now, before we get to the next episode, make sure you hit the subscribe button and that little bell below to make sure you get notified every time we post a new episode. And now, enjoy the show. Well, that's it, Aaron. We got Mike on the line. What do you want to ask him?
If you were an LP, what are the top three things you look for when you're trying to partner with a GP?
You need to ask for referrals from other LPs that have invested with them. You need to talk to people that really have done business with these guys. And if they're not willing to give you referrals, that's maybe a red flag. The second place would be, are they an open book or not? How often do they share their financials with you? Who prepares the financial reports? So you want to look at the reporting as well to make sure it's clean and you get everything that you could possibly need. And the last one I would say is, do they have experience in operating multifamily?
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Very excited for today's show. I'm always excited for the shows. This is another one of our Ask the Expert episodes. We got two amazing people on the line with us, and I'm excited to begin. So today we have Mike Woodfield, our experienced investor, and Aaron Kreymar. So welcome to the show, guys.
Thanks for having me.
Yeah. So Mike, you're going to be in the hot seat first. So let's talk a little bit about you. Do us a favor. Tell us a little bit about your background and history and what got you into apartment investing.
For sure. I born and raised in a little town called Pleasant View, Utah. Grew up there most of my life. Served a mission for my church in South Korea. And then I went up to Utah State University after that and got a degree. Right out of college, I got picked up by a small private equity firm out of more of a family office out of Chicago. Mm-hmm. And I kind of got thrown right into the real world quick with them, executing just business turnarounds. They would go in and buy failing businesses, mm-hmm. much like we go in and buy sometimes failing apartments, and and we would flip them. It was a 5-year hold usually. So mm-hmm. I got cut my teeth doing that and had some great mentors there. From there, I actually got a phone call from Glenn Gonzalez, who's my business partner now. Mm-hmm. He understood that I was doing some asset management and different things, and he was looking for an asset manager in the multifamily world, which I had mm-hmm. limited experience in. And he offered me a job working for a former business of his. Mm-hmm. And I got thrown into the fire there too. I deep end of the pool. I immediately had 10 assets that I oversaw, ranging about 1,400 units. Mm-hmm. And it was about 300 million eventually that I oversaw as the director of asset management at a firm there. Mm-hmm. And he sold all of his assets in 2017, and him and I have been rebuilding a business together since. Nice. I currently have about 1,200 units under ownership between Glenn mm-hmm. and I. We have 500 units under development, and we're closing on 120 unit just core product in San Antonio. Nice. End of next month. So
awesome. So you got a lot of good things going on. Now, have you guys done a lot of value add? I mean, you're talking about core right now, but what was kind of the mentality going in? Have you always done the core type? Have you always done stuff like that, or did you guys start doing value add like a lot of people do?
We started in value add. We've done maybe 27, 28 projects that were value add projects, and we continue to do value add. There's still money to be had there as long as you can find the right deal, as mm-hmm. you know. Yep. So we're buying less value add projects every year than we used to. I think we peaked it. We bought 12 value add projects in 2016. Mm-hmm. And that was our biggest year for value add. The market's gotten a little bit saturated. There's a lot of folks in it, and you just got to be selective about who your sponsor is. They can still find a good deal. We're usually levering off market deals through relationships that we have to find those value add deals. Mm-hmm. there's a natural progression into development. As we got capital, our personal capital built up, we were able to afford many of the upfront costs that are associated with development. And as cap rates have compressed, the unit price per door where we live has gotten well above what the replacement cost would be. So, we're building all in at 165 to 170 a unit. And that same product you couldn't buy for less than 250 a unit here. So it makes sense to develop.
We've been looking at the same thing when we started in the Carolinas. The cost per existing was about 1/3 the cost of building brand new. And at that point, it was like, let's buy existing all day, every day. But in a lot of areas, I think in your major metros, that pendulum was already shifted. In South Carolina, where we operate, it's about equal right now. So I think, smart move there, looking at exactly what you could do with your money versus if you can get something at 165,000 a door instead of 240, I mean, your cost basis is going to win out every time.
Yeah. So that was the logic. There's a lot of nuances and headaches and heartaches that come with development that don't exist in value add. I wouldn't suggest everybody make that plunge right away. Make sure you know what you're doing because it's tough. But we've also through buying multiple projects, we know how difficult it is to find a good deal. It's hard. And if you're honest to yourself during your underwriting process, really how hard it is to find that good deal. So, Glenn and I have become more long-term hold guys, just by virtue of if you have a good deal, don't let it go. It's so hard to replace that cash flow. So we've held a number of our deals recently and plan to hold them long-term. So,
yeah. Now going back way back. We exchanged an email over this last night. I grew up down the road from you. So, what took you away from, was it when Glenn called you that took you away from Utah, or was it before that?
I was already in Atlanta. I moved away when I got that job offer.
Okay.
So I was already gone. I guess Glenn brought me closer back to Utah when I came to Texas. I live in Austin now. So, that was the leap from Utah to Atlanta, and then from Atlanta to Texas. So,
all right, nice, and lots of good stuff is happening in Texas right now. And Austin's, a lot of people are looking for the next Austin in a lot of ways. Just it's been the city that's probably grown faster than any other metro in the nation, and a lot of people are looking for that next Austin because I think it's. I've heard of two caps in Austin. I'm sure you've seen the same, but.
Yep.
Speaking of, what's something I like to ask something I like to ask everybody who comes on the show is about your motivation. In my particular life, I found that my big burning why is what pulled me through, a lot of the tough times, trying to get started. So, what's your why?
Oh, that's a great question. It's probably the only one that matters. As I've grown up, as the years go by, I realized that the only real thing of substance in life is family, friendships, religion, those types of things. And if you don't have the money to support the family, and you don't have the time to dedicate yourself to whatever you believe in, then I don't know if you can really gain a life filled with fulfillment, I guess. I don't think money really breeds fulfillment. Maybe what you get from money and the access it allows you to have to more time is what brings you the fulfillment. So my why, and the reason why I do this, is so I have time to spend with my family, and also to serve in my church.
Nice. Solid answer there. And, our whys are very, very similar in a lot of ways. So let's talk about, we briefly touched on some of the deals you guys did or have done or doing right now. If you'd go into a little more detail, pick your favorite, or just talk about your investment philosophy, we'd appreciate that.
Yeah, sure. And my favorite deal right now is a deal we picked up in Kentucky. It's just north of Nashville, actually.
All right.
It's 258 units. It's a value add project. A guy over there, he was a local. He bought it. I don't think he really knew what he had. And he was like a true like off market guy. He didn't like brokers. He didn't like dealing with. He just wants a handshake. It's a 1-page contract we signed, and we were done.
Nice.
And he actually carried a note back on the project for us at 90% loan to value, and at a 3% interest rate for 3 years.
Jeez.
So,
and when did you pick this up?
Just over a year ago. Wow. And the reason why I did that is he had no T12, he had no rent roll, he had no financials. I mean, he was running it, like the wild, wild west. If someone was late on rent, no problem, we got it. We're good for next month type of thing. He's a good guy. But he wanted to get out of this project and build new stuff. He didn't like managing, this type of product. And so he wanted to get out of it, and we took it off his hands gladly. In this 1 year that we've owned it, we're going through the refinance process right now to long-term agency debt. And we bought it for, I think our all-in price was 16 million, I want to say. And it just got valued at 22.5 million. So in 1 year, we've created a lot of value in that project. So
now, if this guy is, kind of the anti-broker type, how did you guys find this?
That's great. So, you had mentioned some of these guys that mentor you at a cost. Which is fine. They're making money. They're helping people get what they want. I have no problem with anybody that sells knowledge as a service. But I've taken a different approach, and so has Glenn. If we get to know folks and we like them and they ask for some sort of mentorship, we'll do it for free. A guy in Las Vegas asked for some mentorship from Glenn, and he did. He met with them once a week just on Zoom, and he would run through deals with them, and he never asked for anything. But this 258 unit deal came up, and he fell into it somehow, right? Got under a contract, and then said, oh no, what do I do from here? 258 units is way bigger, and the capital raise on it was over $4 million, and he'd never done something that big. So who was the first person he called? It's Glenn. So Glenn said, yeah, we can raise $4 million. And we raised $4 million in 1 week. And we closed that project. And I'm sending out the Q4 distribution this week, and it'll be right around 15% cash on cash for the year. So, it's one of those things. It's my favorite because of the story, right? I would call it a unicorn. This isn't typical. And if you're looking to invest in me, don't plan on it. But, it's one of those things where, we executed the business plan really well. We found a good local management company that has managed it to exactly what we asked of them. And, it's a good deal. We didn't go crazy with our underwriting. In fact, we've absolutely smashed our underwritten rents. So it's one of those deals that just things have gone well. So knock on wood.
And one thing I found over and over again is, you talk about, giving your time and helping people out. I've said this many times, and I probably stole it from someone else to begin with, but the golden rule is actually golden, for a reason. If you help others and you do unto others like you want them to do to you, good things are going to happen, whether you call it karma or, blessings from heaven or whatever, it happens. So,
I agree. Absolutely. It does. 100%. And yeah, exactly. Whatever you call it, you put good out there, and good will come back, usually in spades. So
absolutely.
And likewise, if you become the guy that everybody doesn't want to work with because you're so difficult and you make everything so hard and you're greedy and all you care about is money, then that spreads as well. And that goes back to you in spades. And usually it's, you just don't have any friends and no one likes you.
Nobody calls you when they have deals, and that's what happens. It's just like,
no one likes you unless you have money. No one likes you.
The broker's like, oh, I know he'll buy it, but gosh, I hate that guy. He's going to call someone else he likes better first, unless he gets to a desperation spot. But yeah, absolutely. So that's it. Last question for you. What's next?
Oh man. Like I said, we're closing 120 units down in San Antonio. It's a core product. We raised about $6 million on that project over the past month. And
nice.
So that's been fun. We're about to close that. We have, I mentioned some developments underway. 84 units of multifamily and 10,000 square feet commercial in Leander, Texas here.
Okay.
We have 81 townhomes we're building in Taylor, Texas, which Samsung just announced their $17 billion chip manufacturing plant. They're going to put that out in Taylor.
Nice.
So that was great news for our project. So, and then we have 155 units of multifamily that we're going to develop in Liberty Hill. And we currently have 50 units multifamily under development in Liberty Hill or in Leander. So all kinds of developments, and our goals for this year is that we do another 2 value add deals, 1 more core deal, and then find 1 more development deal. So we're going to start and complete everything we have in the pipeline, and then 4 more deals with our team, and keep doing good deals. So that's our plan.
So you're going to continue doing what you guys have been doing is basically it. I mean, once you find a recipe for success, just, hit that, rinse and repeat button and keep on going. So well, very much appreciate you sharing all that with us. And we're going to switch gears and bring Aaron Kreymar on. So Aaron, welcome.
Thank you, Brian. Good to be here. Mike, nice to meet you.
Nice to meet you too.
Yeah. Aaron, so tell us about yourself.
Sure. So I grew up here in Baltimore, Maryland. I was born here and grew up here. Went to school here and did, after I graduated high school, I went to community college for a couple semesters, focused on real estate and business management. After I finished up that, I got started in the construction industry. I've always been interested in design, development, construction. So I started working for a company that focuses on what we call Division 8, which is doors, frames, and hardware for the commercial construction industry. So we're just suppliers. We're kind of the middleman between manufacturers and the contractors. And spent about 6 years there. Ended up directing the estimating department, training individuals, and managing, the team. After that, switched gears and jumped to a bigger place where I'm at now, which is headquartered in New Jersey, and it's a national company. And I'm, working with the business development team, kind of like pre-construction, business development, and estimating to kind of grow our presence nationwide. So, been involved in the construction industry. I like it. I enjoy different aspects of construction. I like to be on the desk side where I get to look at plans and be involved with all the different partners, architects, contractors, and see these projects come to fruition. Really enjoying that.
Nice.
And that's my history. Here in Baltimore.
Yeah. I mean, so you're in the real estate industry with your normal job. What's gotten you kind of pushed into trying to do multifamily?
Sure. So, I growing up, I kind of only knew of the 9 to 5, the W-2. My parents, kind of been working for, companies for their whole life. They got their college degrees. And that's how I kind of I thought that was the only way to do it, but as I got older and started to, talk to people, learn, read things, started to really realize that there's so many more opportunities out there outside of the regular job. And I'm a, growth oriented individual. I love to learn new things, and talk to people. So I started to kind of think like, how can I do that? So a year ago, just over a year ago, I kind of jumped right into the deep end. I started my own company, KMR Ventures, and bought a property, single family home in Baltimore, to kind of fix and flip that property. Just sold that one actually last week on Friday. So that's my first
Nice.
one bought and sold. And then end of the year, I bought another property, townhome in downtown Baltimore, doing the same thing, fix and flip. Um, and with that going on, I'm really looking to scale and grow that effectively. And I've kind of stumbled upon into multifamily, just again
Hmm.
reading and talking to people, and I see that that is just much more of a scalable, market than doing single
Yeah.
family homes. So I really, started to believe in that and read more about it, and now I'm pivoting to really learn about it and get involved in multifamily.
Yeah. Yeah, I think a lot of people follow the same trajectory. When they start getting in real estate, I mean, what's the first thing most people think of? Fix and flips, or burrs, or whatever. But I also stumbled upon multifamily, and once I caught wind of it, I just started thinking, man, there's a lot of potential there, and
Sure.
I think that's a common path for a lot of people. Um,
Yeah, I
so
think
let's talk. Good.
single family home is, it just seems relatable. It's smaller,
Mhm.
it's easier, it seems like it's something you can do, and it seems like from the
Yeah.
outside that multifamily is just it's too big, it's too scary. But now that I've already kind of been involved, I just see it's not really scary. It's just
Yeah.
a matter of learning the relationships and really just doing it.
Yeah, and you have a great background to jump in and do, especially like the value adds, and potentially even some of the more hairy value adds that a lot of the newer investors, would stray away from. But I think your background, positions you very well um, to take off in this business. But yeah, I mean, yeah, saying looking at the relative ease, I mean, you see flipping shows on HGTV, on like all these different TV shows that talk about flipping and make it look like super easy. And I think that's part of the reason why a lot of people do it. And I think the other reason is, I just looked up the stat a week ago. I think there's 200 million single family homes in the US, and like 20,000 apartment buildings. So just looking at the relative numbers, it's a lot easier to get into that single family space. But
Yeah.
I said, what's your motivation? What's your big burning why?
Great question. And I yeah, actually have a coworker that I talk to often, from previous company. We both kind of see things on the same level, and we both are interested in kind of growing, and in terms of what we can do.
Mhm.
And so we discuss this, and it's become such a burning passion of mine. So the answer is to really to get away from the W-2, to really
Mhm.
create this income that will enable me to create a lifestyle that I want. Mikey touched upon this before, friends, family, religion, whatever it is you believe in. I mean, that's become just a burning passion of mine every day, I think about. And so going into that will enable me to create that income, to spend time on what I really want,
Yeah.
in life. And, you know, working for a different company, having, 9 to 5, that's a lot of time every week, every month, every year that, you're giving to somebody else. And I want to control that time. I want to be able to do what I want with it, things that matter in life, to help
Yeah.
a community, people around me, and spend time with those that matter.
Yeah. Sounds like your guys' whys align, and I appreciate a lot of what it is. I mean, money, like Mike said, money doesn't buy happiness, but it gives you the time to focus on what you want to focus on, and both you guys had the same themes on, family, friends, and service, and bigger causes. And I very much appreciate that. I mean, once again, very, very much aligns with, my why as well. So,
Yeah,
well, that's it, Aaron. We got Mike on the line. What do you want to ask him?
sure. So, Mike, first of all, great to meet you. You seem to be, busy with a lot of great things, and I love, all the different projects you have going on. The story about the one in Kentucky, I love that. Relationships are really, really what drive everything. So I've got a couple of questions. First is, as I'm learning, I see there are a lot of different ways to evaluate, properties, whether, it's cap rates, it's geographical area, the class of property. Is there a certain method that you found to be like the most effective to evaluate a property out of all the different ways that, there are?
Sure. Just as far as finding a value to the property or whether it's a
Yeah,
good buy or
yeah,
not.
exactly.
There's situations I would automatically go to, like, NOI divided by cap rate gives you roughly what you should pay for it. A lot of people don't want you to buy on in-place NOI. They want you to buy on performant NOI, which is kind of the world we live in. And that's why you're buying on low cap rates, right? You're buying on low cap rates. you're praying that you can move rents up and move it up, move the cap rate up. And that's the world we live in. So if that's the case, then you've got to be honest with yourself. Like, are there data points you can point to in the underwriting? Like, for example, if your goal is to buy a property and move the rents up, are there already rents that are achieving that rental rate that you're suggesting? Or are there enough market data that points to that you should be able to increase the rents by that much? And if it's no, then you're really taking a huge risk there. And your lender's going to sniff that out too, and you'll end up with just a lower leverage deal. So I would say what I look at on those types of deals is just for data points within the property already to secure what I think can happen. And then I look outside the deal for the market. What does the market say?
Sure.
And then, as far as other off-market deals, like, for example, that deal in Kentucky, we had no basis. We didn't have a rent roll. We didn't have a T12. We didn't have numbers to look at. We just looked at what we would say the price per pound, right? And the price per pound was good. You look at what, price per door all the other properties are trading for in that class, in that market. And we were like 30 grand below that. I'm like, okay, regardless of what we find inside those units, money can resolve that. And unless we have to spend 30,000 a unit to get it up to where it needs to be, which is a lot of money, then we're going to be okay. So you can kind of like eyeball and kind of like, yeah, that'll work. So we just knew going into it that we were going to be fine. He'd put millions of dollars into renovating it already. So he had spent 12,000 a unit himself. So we knew that we would have to raise about X amount of capital to cover the rest. Right. And we did, and we renovated. There's 30 units out of the 258 that were remaining. We renovated them. And we always buried in a contingency budget, and we're good. Every situation is a little different. But generally speaking, those are the two methods I look at, is like sales comps in the market. Are you way above them or way below? And then also just in place NOI.
Gotcha. Okay, awesome. If you were an LP, because I'm looking at myself, currently I'm trying to learn and maybe I'd find myself in LP shoes. What are the top 3 things you look for when you're trying to partner with a GP? Qualities, or what are those things that are important?
That's a great question. I would say you need to ask for referrals from other LPs that have invested with them. You need to talk to people that really have done business with these guys. And if they're not willing to give you referrals, that's maybe a red flag. They should have people that trust them and like them. I would say that would be the first place. The second place would be, are they an open book or not? How often do they share their financials with you? Who prepares the financial reports? Bad accounting and, manipulating accounting isn't, I guess we don't avoid that in this industry. It sure happens. So, we always use a third party property management company for the most part, and they prepare all the accounting. We never touch it. So it comes to us and then we just send it out. So you want to look at the reporting as well to make sure it's clean and you get everything that you could possibly need. And the last one I would say is, do they have experience in operating multifamily?
Sure.
You can be the most educated guy, on the East Coast. A lot of good schools on the East Coast, I hear. I'm from the West Coast. I'm in Texas now. But,
there's a lot of good Utah schools too. So,
I happen to go to the best one. But anyways.
I don't know about that. But, yeah.
Oh, fair enough. But, you can be the most educated guy or gal in the world and look at all the spreadsheets. But when you go on site and you're doing that site visit, are you able to smell through the bull crap and really figure out what's happening there? and analyzing things is super important too. Don't get me wrong. You need to do both.
Yeah.
But I would say look for somebody that has some experience or some credentials or something that shows like, hey, I know how to operate this thing, from a property management level, and I know how to view it from a ownership and asset management level, as well. So, what's more important? I'll ask you, what's more important than execution of the business plan? Right. I mean,
Right.
so.
No, I'll tell you on the LP investments I've done, my number one criteria, actually there's two things that I invest with, but when one of my criteria is clearly, do I think the operators can execute the business plan? All right. And that's it. I mean, that's really what I'm trying to find out. And Mike had a lot of good ways to sniff that out. But there have been also times where I've invested with people because I really like them, I mean, and it's more of a relationship type thing. It's like, hey, I like this guy, they may not be the best operators out there, may not be the best deal out there, but we have a really solid relationship. And, so there have been times that I've invested on relationships too. So
That's
really, I think, yeah,
that's key. That's key. And I'll say this, we've had deals that haven't gone perfect. We've had deals that, we've lost money on. Not every deal goes like down the fairway the way you think it's going to go. And sometimes you're just flat out wrong on your underwriting and you made assumptions and it didn't work. And if you've been in the business long enough, you're going to lose once or twice. We've done over 30 projects, and our average IRR is, north of 45%. But, there's deals that haven't gone perfect. So I would say that you need a sponsor or a GP that's honest with you as well. Like, you don't want them to only share the good news. Like, they need to be able to share the bad news, and you have to view it as a partnership. Like, if you're running a business and your partner just shares the good and never tells you really what's happening, you're just going to surprise after surprise down the road. So Glenn and I have always just been upfront and honest with our investors. This is what's going on. If things didn't hit exactly, we report that way. If they hit above, we report that way. But we don't try and paint things and manipulate things. It's just you always get caught. It's not, there's no point in lying. So make sure you trust and you believe the person you're investing with. Why would you give them money otherwise?
Sure. Yeah. Honesty and transparency.
Hard-earned money.
Yeah. Honesty and transparency are, some key things that it doesn't pay to do it the other way.
No.
Just is always a good thing.
Yeah.
Which this conversation leads into my next question. You've done a lot of deals, a lot of things going on, really exciting things going on. If you could tell me, if you could name one mistake which you learned from the most, what would that be?
Oh man, I should have brought a list to you. I could just publish it, on my LinkedIn or something.
Yeah.
I would say the biggest mistake that I've made is getting the money, dollar signs in my eyes when you're looking at a deal. You got these acquisition fees and asset management fees and such. And I did it one time, and I knew the deal could either be really great or it could just be mediocre. It turned out to be mediocre, the 13% IRR to the investors over the course of 18 months. And, those investors had invested with us on other deals they did fantastic on. They viewed us as just, one level blended together. Their IRRs were still great. But, that deal caused me so much stress because the cash flow that we had underwrote just wasn't there. And we had to put some dollars into it out of our own pocket to keep it limping along to pay bills. And it was like a hot potato. We just wanted to get rid of it. So fortunately, our debt was set up to where we could get rid of it pretty quickly. But I think probably if I go back, I'd say, I'll just pass on that one, Mike. So, and I say this, there's a lot of people that make worse mistakes than that. They add things to other income that aren't going to happen. And don't lie to yourself on underwriting ever, because you'll have to live with it in asset management. So.
And I'll piggyback on that one. I mean, he mentioned, that the debt was such that they could get rid of it. One of the mistakes that I made is we've got a loan with a yield maintenance 12-year term, and going in, we had a 5-year exit strategy, and it was our first deal. It was our very first deal, and we were chasing low interest rates. And, basically where we're at right now is we don't have the flexibility that Mike had, so if this is a property where you're sinking cash in and it's a hot potato, on this particular property, we've got about $1 million prepayment penalty. So, the first $1 million in profits is going straight to the lender. So
just wait for those interest rates to go up, and
yeah,
you'll
I mean, and it's going to be a good, solid project over the next several years. It's just that, that 5-year hold may turn into a 7 or an 8-year hold, just because the lending didn't match the business plan, and that's something I see a lot of newer investors, a mistake a lot of newer investors make, one that we made.
Yeah. Yep. Typical, happens, right?
Yep. Never do it again.
Never do it again.
Yeah.
Okay. Another question I had was, I've seen a lot of different ways to network. You can go to events, meeting with people, social media. Like, what have you found to be the most effective to create these relationships?
That's such a good question. Glenn and I were talking about it yesterday. I'm not a big social media guy. I don't like being out in front of people and Facebook lives and live, it's not my forte. I'm a private person, as far as my family and what I do at work. I don't mind stuff being on LinkedIn, but, anyways. So I don't do the social media as much for work. It's more of just like a personal journal from my family. As far as like events and stuff, those are great for networking. I would say don't waste your time. Unless if you have vendors that you need to make relationships with, go with that in mind. Like if you needed a good insurance broker or a cost segregation person or a 1031 expert, and you're trying to build your team, those conferences are fantastic for those types of things, because the vendors are usually the ones that give you the time of day and take you to dinner. But if you're looking for investors on a deal or trying to find a deal, try and set up appointments with brokers beforehand. They usually send out a list of who's going to be there. Email people beforehand and set up times, and help fill up their day, because they're looking to do the same thing as you, make the most of their time. And then beyond that, I would say, you can't be the shy guy in the room or the wallflower. If you're there at a conference, get your money's worth. Go up and talk to people, shake their hand. Hey, this is what I do. What do you do? But if you're a reserved person and you're shy, time to get out of your shell and boost that volume of your voice up a few octaves and get in there and get it done. So it just takes you getting out of your comfort zone if you're not naturally that person.
Yep.
Yeah. And I'm going to throw in a product endorsement here. When I go to conferences, white monsters, I'm a reserved, shy. I mean, I'm not shy necessarily. I'm reserved. I'm a little introverted, so, when I go to those conferences, I've got to do something to get me out there and start talking. But I think Mike hit the nail on the head. Is when you go to these conferences, know what you want to get out of the conference, and then hyper focus on what you're looking for. So if you're going into a conference looking for vendors, make sure you're talking to all the vendors. If you're going into a conference looking for potential partners and you do X and you're looking for somebody to do Y, if you meet somebody and they're not, what you're looking for, just make it a short conversation. Hey, it was great talking to you. I've got to go to the bathroom or something like that. But just be hyper focused on what you're looking for, and even take it one step back. And Mike mentioned this as well. Go to the conferences that are going to have what you're looking for there. So,
yeah. Yep.
We are about out of time. Aaron, we got time for one more question if you got one, Aaron.
Sure. So again, going back to the LPGP question, different people prefer different things. Mike, what have you found? What do you find to be the pros and cons of
Mhm.
LP versus GP? What to you? What is really the pro and con between the two?
Well, I've never been an LP, so I don't know what that feels like. But I've worked with a lot of them, so I kind of understand their mentality. They want me to do all the work and make them money, and they just want me to send them a check and their K1 that shows a negative, right?
Yeah.
So that's what the LP wants me to do. And the benefit of that is that you don't have to do the work, right?
Yeah.
You're just willing to give up a piece of the pie to a guy that's willing to do the work. So I don't really understand the LP world. I'm reluctant to give people my money to go do it. I would prefer to invest it in my own deals just because I have control, but I'm also not a doctor that all I do is be a doctor. I don't have time to go buy real estate. I work 80 hours a week. So I live in a different world than most of these LP investors that are just like, I really just want to enjoy passive income. I'm still young enough that I enjoy working. I like putting in a lot of hours a week. So on the GP side, if you view this as a lifestyle business, I don't want to tell you. You haven't bought enough deals. How about that? If you view this as a lifestyle business and you're not making enough money, probably. You know, I work constantly around the clock. We have a team that I manage, and it's all dedicated towards hitting the returns that we promised and being good to our LPs. But if as a GP, you get the deal done, and this is what I see. Like, I'm a hunter, right? You can see my hat, so you may have gleaned that. But if you got to shoot a deer and the deer comes walking in, and you pull the bow back, and you release the arrow and you kill the deer, and then you leave it dead, you've hunted, but you haven't harvested, right? So, I've seen a lot of sponsors that they love the hunt.
Mhm.
That the thrill of the acquisition, the thrill of the deal is what gets them up in the morning, but they hate to harvest. They hate asset management. They don't like executing a business plan. And so, they really want to be an LP with the benefit of a GP. And that does not work in our industries.
Awesome. Thanks
Yeah.
for the insight, Mike.
Yeah.
Yeah. Overall, I think, his answer summed it up, but, I look at it as, what are your resources? If you have a lot of time and not a lot of money, going GP is really the only route for you.
Sure. Yeah.
If you're the other way around, you've got a lot of money, you like what you're doing, as far as a W-2 or a business or whatever you're doing for an income, the LP route is the best way to go. So I like just to break it up between, what are your current resources and what you're trying to do. And if you look at where you are, where you're trying to go and what you have available to you, the answer is usually pretty clear, at the end of the day. So,
Yep.
All right. Well, now we are out of time. So I'll actually close it up instead of pretending this time. But thanks to both of you for coming on the podcast today. One last question for each of you. And Mike, you get to go first. How can listeners learn more about you?
Go to our website, obsidiancapitalco.com, or email me at mike@obsidiancapitalco.com.
All right. And Aaron, same question for you.
Yep, you can find me on LinkedIn, Aaron Kreymar, or send me an email, aaronk@kmrventures.com. Looking to just talk to people, grow these relationships, learn as much as I can, and get involved. So,
Cool.
All right. Awesome. And we'll have links to those in the show notes for everybody to swipe, tap, and that magical internet thing will whisk you away to contact these two gentlemen. So once again, thanks a lot for coming on this show. I had a great time with you.
same here.
Thanks.
Thanks, Brian.
Appreciate
Thanks, Mike.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, you're missing out. Get 30 days free by clicking the link in the description or go to thetribeoftitans.info. And we'll see you there.